Coming up on Market to Market. Agriculture funding is slashed in the new president's budget. A nor'easter slams one region while another assesses fire damage. And a crisp take on a lunchbox staple. Those stories and market analysis with Dan Huber next.
Ways to get along.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, March 17 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The ball is tipped, and there you are, wondering what higher interest rates will mean to the overall economy. This week, the Federal Reserve raised the short-term rate for the second time in 3 months. Retail sales ticked up only 0.1% as delays on tax refunds slowed shoppers. Overall, the economic picture on rural Main Street is failing to improve. The Creighton survey stayed below growth neutral for the 19th straight month. As rural America looks for better economic conditions, it remains without a leader at the USDA. Sonny Perdue's confirmation hearing is now scheduled for Thursday. Mr. Perdue will enter the Senate's committee room with less agency to oversee if President Trump's budget holds. Funding was eliminated for several government agencies, including the Corporation for Public Broadcasting, which indirectly supports Market to Market and the stations that carry this program. Josh Bittner has more.
Financial cuts could trickle down from Pennsylvania Avenue to Main Street under the president's budget proposal, which would eliminate 21% of the Agriculture Department's discretionary spending. The bone-deep cut to $17.9 billion would help offset the $54 billion balloon in the defense budget that adds personnel, new equipment, and more nuclear weapons. The blueprint leaves mandatory expenditures like farm subsidies untouched, but USDA would see a $4.7 billion decrease in programs lawmakers can tweak from year to year. Under the plan, financial whittling would affect rural water quality initiatives, forestry, international food aid, and county-level data collection. And while additional cuts to WIC, the Special Supplemental Nutrition Program for Women, Infants, and Children, would add another $150 million in savings to the $273 million slashed by Obama in recent years, Trump would maintain the status quo for other assistance like SNAP, the program formerly known as food stamps. For Market to Market, I'm Josh Bittner.
There was continued improvement in the nationwide conditions of the latest drought monitor. However, much of Missouri, Oklahoma, and Arkansas are still in moderate drought, as are some parts of the Northeast, which received a winter blast of moisture to begin the week. John Torpy reports.
Both ends of the winter spectrum hit the U.S. this week as winter returned with a vengeance in the Northeast, and strong winds whipped wildfires in the tender, dry plains. Over 2 feet of snow was pushed along by high winds as a late winter message was delivered to New England states. Massachusetts received a majority of the flakes, while warmer temperatures closer to the coast produced more rain than snow. Out west, winds gusting across Colorado, Kansas, Oklahoma, and Texas continued to fan several wildfires sparked by dry conditions in the high plains. Clark County, Kansas, a region known for cattle production and ranching, is one of the hardest hit areas. More than 400,000 acres were charred, and county officials estimate up to 9,000 head of cattle have been lost. Donations of hay, fencing, and other supplies were pouring in from across the country to help producers contain herds and care for orphaned calves.
Through the stars, through difficulty. Madam President, it's just not a motto. It's who we are.
For Market to Market, I'm John Torpy.
2/3 of the nation's apples come from Washington state at a value of nearly $2.4 billion. The state's industry is taking a unified approach to introduce a new variety they believe is out of this world. Peter Tubbs has our cover story.
200 apple growers and industry representatives have come to a field day in Prosser, Washington, to get a glimpse of an apple most have already committed to growing, processing, and distributing. Its hybrid name is WA48, but the public will know it as Cosmic Crisp.
That apple is extremely grower friendly. It sets itself up well in the tree on either spindle, wall trellis, V-trellis, what have you. It's going to be way easier to deal with than the Honeycrisp and a way better keeper.
The rollout of Cosmic Crisp is a first for the apple industry in that it mimics the introduction of many packaged foods. Apples are introduced to growers every year by university research farms, but this is the first time an apple has been taken through taste tests and focus groups before introduction. The audience data assured processors and wholesalers there is a market for the new apple.
When a grower is deciding to plant a new variety, feel only so comfortable with taking on a huge amount of risk with a new investment. The good thing about this sort of situation is that that risk gets spread out through a whole industry. So more emphasis can be put on to everyone collaborating and having their own orchards of this new variety so that there will be a huge amount of volume rather than a small amount trickling into the market over a long period of time.
The apple breeding program at Washington State University developed WA48 over 20 years, winnowing down an initial group of 40 favorable varieties to 2 that had commercial potential, WA2 and WA48. A crunchy and juicy apple, WA48 was more grower-friendly than Honeycrisp, which is prone to rot, mildew, and sunburn in the field, and possesses a thin skin that leads to punctures and bruising during processing. Leaving half of a Honeycrisp crop in the orchard is a common occurrence. Cosmic Crisp avoids most of these issues and brings new advantages to the industry. Outside the orchard, the apple stores for 12 months without special measures like a low oxygen atmosphere and is extremely slow to brown once cut.
So from a consumer perspective, really, it's just a great eating apple. Ultimately, that's what the consumer wants. Most consumers key in on textural traits initially, and Cosmic Crisp is crisp, obviously, hence the name. It's also extremely juicy, and so it's one of those really nice apples that gives you that fantastic mouthfeel and the refreshing kind of juiciness that you get with an ultra-crisp apple type.
Dozens of varieties, some heirloom, some hybrid, are grown by individual orchards for the specialized apple market for audiences that prefer something unique. The potential of Cosmic Crisp encouraged the researchers at Washington State University to bring the entire supply chain to the table for the rollout of the new apple variety.
We've created a marketing advisory board made up of all of the main sales and marketing groups, and once they got on board, they felt compelled to get behind this.
Exclusivity helped bring growers on board. Cosmic Crisp will only be grown in Washington for 10 years to give growers time to recoup their investment before the variety goes global. The apple breeding program at Washington State will see a revenue stream to fund future research by charging $1 per tree start and 4.5% of the wholesale sales of Cosmic Crisp apples grown in the state of Washington.
Cosmic Crisp harvests in what is typically Red Delicious season. So many growers have been looking for something that will replace Red Delicious in terms of their harvest portfolio.
It is expected that Red Delicious trees, a variety that sees 85% of the U.S. crop exported internationally, will be the first to be replaced with Cosmic Crisp, with other older varieties like Cortland and Braeburn to also lose acreage. The goal is to join Gala, Fuji, Granny Smith, Golden Delicious, and Honeycrisp as the apples Americans most consume. Grower and packer interest is expected to make the rollout of Cosmic Crisp the fastest the industry has ever seen. The last major apple variety to be introduced, Pink Lady, required 15 years to reach 1 million trees in the ground. Cosmic Crisp is expected to double that number in only 2 years. Interest in Cosmic Crisp has been so strong that a lottery was held to parcel out the initial tree starts. Few orchards will get as many as they want, but most will get enough for a dedicated section of their orchard. Roughly 700,000 trees will be grafted in 2017, with another 1.3 million in 2018, making it the largest apple tree introduction ever. Cosmic Crisp apples should begin to appear in West Coast markets in 2019 and expand nationally in 2020.
If you want to talk about the old Red Delicious and where that went and its sellability through the state of Washington way back 30 years ago, this is the new Red Delicious, but 10 times better.
Growing the better apple won't come cheap. Converting an orchard to a new variety like Cosmic Crisp can cost $35,000 per acre. Using high-density trellis systems, less than 1,500 acres statewide will be needed to start 2 million trees, but at a cost to growers of over $40 million. Time will tell if consumers will find room for this new apple in their shopping carts. For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Foreign buyers of U.S. grain helped keep the commodity market stable against headwinds of a bountiful South American harvest. For the week, May wheat lost 4 cents, and the nearby corn contract gained 3 cents. An oversold market plus pressure from meal demand crushed gains in the May soybean contract, which dropped 7 cents. May meal held on for an increase of 20 cents per ton. In the softs, May cotton improved $1.07 per hundredweight. Over in the dairy parlor, April Class 3 milk futures gave back 35 cents. The livestock sector had another positive week as the April cattle contract expanded $1.73. April feeders increased nearly $5, and the April lean hog contract added 87 cents. In the currency markets, the U.S. dollar index hit a 6-week low and lost 99 basis points. Crude oil sweetened 29 cents per barrel. COMEX gold gained $28.80 per ounce, and the Goldman Sachs Commodity Index increased nearly 3 basis points to finish the week at 383 even. Here now to lend us his insight on these and other trends is one of our regular market analysts, Dan Huber. Dan, welcome back.
Thanks very much. Great to be here.
We're excited to have you, but before we get started, you can listen to our market discussion anytime by downloading our market analysis podcast on our website, iptv.org/MTOM. Now, Dan, let's jump into this wheat market.
Certainly.
A little bit of stability, still down around value levels, if we think about it in those terms. Is there some hope as you look out to the future?
Again, I'm still one that believes this wheat market's in a long-term basing pattern. Domestically, when you look at the acreage out there, there's 46 million acres. I mean, there's certainly very little room for error, and already a few questionable spots with the dryness in the south and southwest, and of course some freezing temperatures unexpectedly in many areas in the last week here. Not that we know if there was any significant damage done, but by no means are you getting off to a perfect start. So, weighted on the other side, Russia was out in the last week talking about great crops. Good inventories now. They're probably going to really kind of step back into the export market in a little stronger fashion. They counterbalance each other out, but again, I just don't think there's much room for error here in this wheat market, particularly in the domestic front, and I by no means want to be on the bearish side, but we still need a spark. We're going to need a little something to come along to really poke us to the upside. We thought maybe there was going to be a little more enthusiasm when Egypt canceled some purchases from the Black Sea region. Haven't really seen that materialize here. Our export sales were so-so this week, so we still got to back it up with demand.
All right. Well, so we're not bearish, but we don't have a reason to be bullish quite yet.
Cautiously
optimistic.
There we go.
Optimistically biased.
Right.
Well, now let's talk about the corn market. We did see, again, continued stability. We saw a nice little 3-cent rise in the nearby. What does that tell you on old crop corn? How are we sitting as we look out into the first part of really springtime?
You know, certainly interesting trade. You know, when we go back a week to the supply demand reports by the USDA, and the market had rallied relatively well into those numbers. We really needed to have something a little more positive to kind of extend that up. We were, down a technical standpoint, we're already a little bit overbought. That wasn't delivered, so it was natural to see the markets break back down. But again, it looks like we get into this value area. We started seeing end user pricing. And probably as much as anything that came as a bit of a shocker was news that Russia was in, probably bought at least 3 cargoes, Russia, China bought at least 3 cargoes of corn, possibly 6. And this is just a week after talking about how the inventories are going to start liquidating them down. We're going to more of a free market, looking for alternative uses to eat up some domestic corn. So, you know, they never exactly state really what their intentions are, but you know, if you look at their patterns in the past, once they step into a market, it's usually not just a one-off event. They tend to be big players when they come in.
So hopefully we'll see that continue.
Right on.
Looking at the new crop side, we've got a question here from one of our followers on Twitter, and we encourage all of you to follow us on Twitter and check us out on YouTube. Market to Market now has a YouTube channel.
Very good.
But Luke in Nebraska wants to know how big of a farmer short position has been built up in December corn here in the last month.
You know, I'm going to tend to say it's very minor at this point in time. You know, $4 corn, we didn't really quite make $4 corn, but $4 corn, I think, becomes an interesting area for some people. But boy, is it someplace with all of the growing risk in front of you, is it a place you really step in and really start locking in profit or locking in future production? I would say if it was 10%, I would be shocked if it would be that much. You know, soybeans a different category. But
let's talk about that. On the soybean side, we have seen prices really slip. We've been on this 2-week break in the bean market. Are we, for new crop beans, are we out of luck when it comes to locking in $10?
Well, you know, once again, it's pretty difficult to say out of luck in the month of March. You know, we have, again, all of the whole production risk ahead of us this year yet. But, you know, that general sentiment right now is that we're probably going to see 3, maybe 4 million additional acres of soybeans out there. Does provide a bit of a buffer there. Now, recognize, even with those numbers factored in from the report that came out earlier in the month from the USDA, we still ended up with about an unchanged carryout, 420-ish million bushels. So, you know, in essence, they're saying we're going to need all of those acres even to stay pat. But that said, higher acreage, yeah, there's going to be a little more of a defensive tone there. You know, we certainly have recommended with people that, you know, in that $10 range, if you're switching additional acres into soybeans, you're doing it for an economic reason. Take advantage of those economics and at least get those bushels priced.
Now, we've been hearing a lot about South America's soybean harvest. It's been, from all reports, phenomenal. Right. Are we going to see that push higher than 108 million metric tons in your mind?
Oh, you know, I mean, it certainly could be. There's been a few estimates out there, the 109, 109.6. You know, I think the 107, 108 range is probably pretty reasonable. Now, granted, they should be well past the 50% mark. But, you know, you go back a year ago. A year ago, it was that latter half of the harvest that really got into some problems with weather issues. Doesn't seem to be in the forecast right at this point in time. But, you know, certainly the entire crop is not in the bin just yet. But overall, just looks like a tremendous year down there once again.
So if you have an optimistic bias on the wheat market, do you have a pessimistic bias in beans, or are we just not quite there yet?
You know, I think not quite there. Beans, yes. I mean, well, in fact, the entire complex, I mean, corn, beans, and wheat are all a little bit defensive here this week. They all really seem to have kind of hit that point. You know, $10 beans seems to be an area where you start finding value buyers in there again on the front side of the market at least. So, yeah, I don't think we're going to get carried away to the upside, but, you know, I certainly think we can bounce out of here. And, you know, again, not a runaway bull market. We really have to add some weather into here before we can get excitement going again. But at least I think, you know, we have a limited downside at this point in time.
Well, speaking of getting excited, the cotton market up $1.07 on the week. What happened? I wasn't paying all that close of attention.
You know, here again, too, a little bit of positive news on the supply-demand reports. I think the growing concern about some of the weather down in those southern cotton-growing regions. There's been discussion that we'll probably see a few additional acres out there. Not that it's going to be huge. I mean, it's just such an investment to really swing back over to cotton. You know, that said, you know, this has been a nice rally in the cotton market. The incentive does seem to be there to do that. Now, granted, the rally back looked very impressive, or sounds very impressive, up $0.01 for the week. We're really just kind of back to the same resistance we've been over the last 2 to 3 weeks.
Okay.
You know,
that $80 is the line.
It is the line in the sand that we need to cross.
Well, now let's talk talk about the cattle market. Both live cattle and feeder cattle substantially higher on the week, especially feeder cattle. Is this just packer demand flowing back through the system?
I think a combination of packer demand. We know packers are making phenomenal money on killing cattle at this point in time. Good demand at the retail counter, and granted, as we even discussed a little bit earlier, when you have 50 and 60 degree temperatures in the month of March, those grills are going to get fired up a little earlier than normal. So I think they're trying to get those coffers filled up right at this point in time. I tend to think it's going to be somewhat of a flash in the pan. Again, consumer demand has probably surprised everyone, but here again too, it's not that we have any kind of shortage of animals that are coming to market as we move into the summer months. So I tend to think if you can take advantage of it, you take advantage of it now.
And how defensive do I want to be? How far out into the future do I want to be utilizing this rally, given the tremendous discounts into the summer months?
Granted, they're discounts, and maybe that's a little bit deceptive. Yes, you've got a $10 premium on the April over the June. That said, we're not dealing with technically storable commodities. I mean, you still have to look at that June. If you're making money at a 109 or 108, there's not an excuse why at least step up, look at doing some puts to kind of lock in that floor, because we've seen enough red ink in the cattle market over the last couple of years that better safe than sorry right now. So.
Yes, indeed. Now, as we take a look at the lean hog picture, again, a little bit of strength, a lot, I guess I call it stability. Has consumer demand been as strong on the retail side for pork as it has been for beef?
I don't think it's been quite as strong, but certainly they coattail with each other. And here that these markets have kind of refused to break. Not that they haven't pulled back some, but here we bounced right back up against recent highs once again. I think it's got the short just a little bit uncomfortable. They're tending to maybe push a few of those people out, and more so in the cattle than the hogs, but I think you've seen the same thing in the hogs. But here again, we've just moved back to what have been highs that we've witnessed over the last 30 days. We're going to need some kind of spark of either demand news or export news possibly.
Has there been much on the export news side in the lean hog market?
Not that I've seen, granted, I mean, with Smithfield, companies like this, right. Yes, we are moving more pork into the Asian market than we used to, but here again, there's nothing out of the ordinary at this point in time.
Okay.
So.
As we look at finding export markets, the strength of the U.S. dollar has been a headwind. We did see, you touched on it earlier, the Federal Reserve did raise rates again for this quarter, and yet the dollar is lower on the week. Buying the rumors, selling the news?
Almost seemed like a perfect scenario for that. And again, we have talked for so long about this hike in interest rates, and I get a little bit of a kick out of some of the way it's really even responded to, as far as the aggressive moves by the Fed to start pushing rates higher, and aggressive move. This is the third rate hike, really, not just in the last 15 months. In the last 10 years.
Yeah.
We've been zero interest rates since 2000, or declining, or zero interest rates really since 2006, 2007. Hardly what you would call an aggressive rate. We already know the Fed is projected to do 2 more hikes here later this year. I think the market had certainly built a lot of that in. They maybe were expecting the Fed to say, maybe have a little more aggressive forward guidance, like, yes, we could possibly push it even higher on some of the future rises. That wasn't in the language at all, and I think that was kind of a disappointment for the dollar.
So the trade is still anticipating 2 more quarter-point increases
in 2017. Actually, they've projected, in the forward guidance, 3 more in 2018.
So we've got some coming in the future.
Right. Basically, the Fed has said their targeted rate is 2.75% to 3% Fed fund rates by the end of 2018.
All right.
So here again, that's already factored in.
We'll keep an eye on it. Dan Huber, thanks so much for taking the time to join us.
Absolutely.
That wraps up the broadcast portion of Market to Market, but Dan and I will keep the market conversation going, including answering more of your questions during Market Plus, which you can find on our website. Now, Market to Market may be airing in different time slots due to PBS fundraising activities. So if you find value in our program, please consider making an investment in a service that provides you with the news and market analysis you've come to know and trust. And join us again next week when we look at how one-stop shopping is connecting growers and buyers. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.